Hi, everybody. I'm Brittany Lewis, a breaking news reporter here at Forbes. Joining me now is Matthew Martin, senior U.S. economist at Oxford Economics. Matthew, thanks so much for joining me.
Hi, Brittany. Thanks for having me. It's good to be back.
Days before President Donald Trump's August 1st deadline, the U.S. and EU struck a trade agreement. And essentially, what this boils down to is that they are agreeing to a 15% tariff rate on most EU goods. And President Trump described this deal as the biggest deal ever made. What do you think? What are some of your takeaways here?
I think it's a great question. And obviously, as we're getting more of these deals across the line, we're getting a bit more information of what, the end game is for tariffs. Now, in terms of whether this is the largest deal ever, I think that's certainly up for question, mainly because the deal in itself has lacks a fair bit of, details and clarity of ultimately where it's ended up. And like its previous deals before, it's not a binding contract. So in the end, we're still left with a little bit of uncertainty.
And that's a similar sentiment that you gave us back in May when you and I were talking about the US UK framework of a deal. And you said, though, that the UK comes out farther ahead than the US in that deal. What do you think of this one now? Based on the scant details we know, who's the winner, who's the loser?
Yeah, I think first and foremost, obviously this is an escalation in tariff rates overall. So I think those who are importing goods from the EU are certainly going to see a bit of a loss there. I mean, we're moving up towards 15% in most sectors. Steel and metals is still 50%. So those who are importing are still going to see a higher rate. I think where the quote unquote winners will certainly be on the oil side. The EU had committed to buying up to $250 billion of gas and oil exports from the US. Now the question there is really just A, is that feasible? And B is like how likely are they to be held to that contract? And when we look at the numbers, the U.S. exports somewhere around 300 billion a year in total exports. So the idea that we're going to be able to double total production and the drop of a hat seems unlikely. A lot of producers here are more tied to global oil prices, and at their current levels, it doesn't make sense to really ramp up production. And so I think, and then in terms of the additional investment that the EU has agreed to, 600 billion or something of the like, the EU can't really force private industry to really invest in the US that they already didn't have planned. So whether that will actually come to fruition is certainly up for question. So, I think the win here is that we have some more certainty around tariffs and ultimately where they're going to end up. But certainly, we're going to be facing higher prices. It doesn't necessarily mean the U.S. exporters have a lot of additional market access. So, it's hard to really parse through, who the true wins are at the moment.
I want to talk about this tariff whiplash that we've really seen since April 2nd, which President Trump dubbed as Liberation Day, because that day he threatened the EU with 20% reciprocal tariffs. And then since then, the threats have changed. At one point, it was 50% tariffs for the EU, then it was 30%. And now we landed on this 15% for most goods from the EU. Do you think that rate is a high enough rate where businesses might say, you know what, that's too high for me. I can't do business with the United States?
Um, I think it's probably, when we're talking if you'd asked me a year ago, a 15% tariff obviously sounded much higher. But at this point, where we've seen levels come down from, this still, classifies as, a bit of a de-escalation in, trade talks. I think where the real focus will be is, tariffs are likely here to stay. It does not seem like we're going to be going down from here. It seems like 15% is going to be the base layer across all countries. So, in terms of doing business with the United States, not going to be like there's a lot of places to hide for U.S. importers. They're going to be facing similar levels at other countries. So I think what we're going to see is while we'll get that additional 15% on EU goods, at least the importers know that this is likely to be the level going forward, and that there aren't going to be additional whiplashes. So I think rather than cut off the any import export from the EU, it's actually going to lead to continued trade There might be some diversion to other countries. U.S. importers might look to other sources, but at the same time, at least they now have some certainty that 15% is the level. They can continue to bring them. They can pass that price along either to their customers or the consumer in the end. And we'll have that, one-time price increase, and then from there we'll kind of just move forward as business as usual, if that is the case. So
there has been mixed reaction to this deal. President Trump, as you and I discussed, touted it as perhaps one of the biggest deals ever made. The markets reacted favorably to this. The European Commission president said the deal, quote, creates certainty in uncertain times. It delivers stability and predictability. But there haven't all been kind words for this deal. The French prime minister said this, quote, it is a dark day when an alliance of free peoples, united to assert their values and defend their interests, resolves to submission. And France's High Commissioner for Strategy and Planning said the deal was unequal and unbalanced, and Europe didn't wield its strength. We are the world's leading trading power. What do you make of that reaction, and what does that say to you as an economist?
yeah, and I think for particularly those countries in the EU, it's a fair reaction. I think that is a key kind of detail of the deal overall, is that it did not include additional reciprocal tariffs in the EU. So they are essentially accepting that their goods sent to the US will have this 15% watermark, but that they're not going to apply anything onto US goods. And I think what that really means is, ultimately tariffs are going to be used as a source of revenue here in the U.S. As a tax on U.S. Goods coming into the U.S. And they're unlikely to go anywhere once they're a solid source of revenue for the federal government. So I think ultimately what it means is that it seems like tariffs are here to stay. It seems like if you're willing to play ball with Trump, if the EU is not going to put on reciprocal tariffs, it's unlikely that other countries are going to feel bold enough to do so. I mean, obviously, there's still a lot to be had with the U.S.-China negotiations, but ultimately, it seems like this is kind of the route we're heading towards.
And the EU and the US have such an important trading relationship, and they're huge trading partners. The Commerce Department said that last year alone, the US and EU collectively traded over $975 billion worth of goods. So what do you think that this deal really does to both economies? And what do you think this says largely about transatlantic trade?
Yeah, I think at the end of the day, the additional 15% increase on EU goods is going to lead to less consumption of them overall. If it's just a more expensive good, you're less likely to consume as much. So I think what you will see is a decrease overall in trade flows, particularly into the U.S. In terms of additional market access, outside the oil and gas, didn't just seem to be a lot of, at least in the deal itself, a lot of additional access for U.S. exporters into the EU. So not a lot of details that point to expansion of trade flows between the two countries, or the EU and the U.S. So I think ultimately this still leads to less trade. I think the upside here again is at least it leads to some certainty, and it removes at least some of the hesitation from doing trade. Is that you didn't know where tariffs were going to end up. At least for now, you know where they are.
And I think that that's a big theme, perhaps the biggest theme really since Liberation Day, was this sense of uncertainty. Because as we know, President Trump has flip-flopped on tariffs over 24 times since he started his second term. This 15% rate, though, it seems like he's liking the 15% because a recent deal with Japan, they have the same tariff rate at 15%. August 1st is right around the corner here. Do you think that that 15% is going to be the baseline?
Yeah. Again, I think obviously we've seen some trade deals come through, and they've been on major trading partners: the UK, Japan, the EU, obviously. But there's still a fair bit of countries out there that have not, had a deal struck at the moment. So it does seem likely that 15% is really, the starting point. For the EU, there was some benefits in that it was a 15% for all goods, so that kind of brings down the total tariff on autos, pharmaceuticals, semiconductors. So, I think that's where we're headed. Ultimately, I think there's going to be a much different deal struck between the U.S. and China. I think that is a different, partnership unto itself. But for other countries, I think really the starting point is 15%. and that we're at least the limit is 15%, and then it's about whittling down from there and getting other exemptions. And so again, I think tariffs are here to stay, and we're going to see the average effective tariff rate in 2025 and 2026 is going to be much higher than where it was in 2023 and 2024.
And we've seen the Trump administration kick the can down the road when it comes to these tariff extensions. They say a date and then they say, never mind, it's extended to X, Y, and Z. The latest extension was August 1st, but it seems like that's the drop dead date. Commerce Secretary Howard Lutnick just over the weekend said no extensions, no more grace periods. August 1st, the tariffs are set. August 1st is just a couple of days away. So what are you looking out for come August 1st?
Yeah, it's we're going to be obviously paying attention come Friday, kind of figure out what's going to happen. I think ultimately, as we saw as well over the weekend, is that or during this week is that the U.S. and China negotiations are going to be kicked down the road. They had their expiry on their negotiations for August 12th. That looks to be moved further down the road as they try to whittle down to a deal. And I think ultimately you're going to see a lot of that come August 1st as well. Again, a lot of the biggest deals are already out of the way. Obviously, EU being one of those, and so. I still think the Trump administration wants to avoid, the largest of economic repercussions from having these high rates of tariffs. And if he's, already seeing deals come through on bigger trading partners, maybe he feels confident that, smaller trade deals are going to come through as well. And so maybe he's more willing to provide additional grace period for those deals to be struck. But again, I think we're still in a period of high uncertainty. And kind of trying to predict what happens August 1st is a bit of a fool's errand, unfortunately.
And I know that we're in high uncertainty, but do you think we'll get to more certain territory once that China deal is struck and is not just a framework, not just a handshake to a framework, it's actually signed, sealed, delivered?
Yeah, I think that is likely the biggest piece we really need to, hear from. China is obviously a large source of imports for a wide range of materials, obviously the rare earths being one, but also computer electronics, but also down to your small items like toys, apparel, and whatnot. And so that is going to be a key, deal that needs to be struck to iron out uncertainty and really get to a place where businesses can start to plan for the future, make decisions on where they're going to source goods from, where they're going to invest in production. I think that's what's really needed in order to, ultimately get to a more certain period. But again, we haven't seen a ton of breakthroughs in that negotiations. It's been kicked down another from August 12th to a predetermined date. So I think we're still a bit of a long way off from that period, unfortunately.
And I think that this is how a lot of the tariff conversations end, right? There's a lot of uncertainty, and until the next time a development comes, I'll talk to you then. And I think that's where I'm going to end it now, that we have this August 1st date just a few days away. There's a lot to look out for between now and then. And I hope once we see more of those deals hammered out, you can join me again. Thank you so much for joining me. You are welcome back anytime, Matthew Martin.
Absolutely. Thanks again for having me.